Welcome to Trading Nation. I'm Brian Sullivan. We're happy to be joined today by Jeff Saut, Chief Investment Strategist at Raymond James. Jeff, it's great to chat with you again. Thank you very much for joining us. You say that this is interesting, though. You said the S&P 500 may have experienced what you call buying climax in a note today. What do you mean by that? And is it as bad as it sounds?
No, it's actually not that bad at all. What a buying climax is, it usually means a sharp spike in prices. It can last 2 days, it can last a week or two, accompanied by heavy volume on the upside, and then the S&P 500 on Friday's close closes below the previous Friday close, which is exactly what happened last week. And what it suggests is that the demand for stocks has waned in the short run, and it either causes the S&P to pause or have an attempt at a pullback, but it's not necessarily a negative thing.
Okay, is it necessarily then a positive thing? I mean, can I take the counterfactual, Jeff?
Yeah, buying climaxes tend to happen in bull markets, and I continue to think, as you know, that we're in a secular bull market that typically lasts 14 or 15 years, and we're about 7.5 years into this one, so I think we've got years left to go.
Wow, you know, because we hear people use the baseball analogy all the time. Oh, we're in the fourth inning, fifth inning. I'm not sure I've heard somebody reference years. You think we're literally only halfway through a massive bull market?
Yeah, I do. I think that the 1949 to 1966 secular bull market, you see how long that lasted. Were there pullbacks? You bet. The Jack Kennedy steel crisis in 1962 lopped 28% off the S&P in a period of weeks. And then we went sideways for 18 years. And then you had the 82 to 2000 secular bull market that was interrupted with a crash in October of 87. But it was all within the construct of a secular bull market that had years left to go.
You know, stocks go up really because there's more buying pressure than selling pressure, you know, and where's that money going to come from, Jeff? When you look at it and say, okay, well, you can make every fundamental argument you want, but there has to be a buyer out there. Who are the buyers today?
Well, first of all, I think we're transitioning from an interest rate-driven secular bull market to an earnings-driven secular bull market. I think you had the trough in profits in the second quarter, and earnings comparisons going forward are going to look good. There were two thin reads, if you will, that happened in the past 2 months. A government study told Norway's pension fund, which is the largest one in the world at $880 billion, that they should increase their exposure to equities from 60 to 70%. Over the weekend, Finland made the statement for their pension fund that they wanted to increase their weighting in U.S. equities from an underweight to a market weight. And more endowment funds and pension funds are coming to the conclusion that the only way they can achieve their expected targeted returns is to increase their exposure to equities. And I think that's exactly what's happening.
You're making a lot of bulls out there very happy. Jeff Saut says we're only about halfway through a 14 or 15 year secular bull market. Jeff, we'll see you back here and on CNBC again soon. Thanks for your time.
Always a pleasure, Brian.
Thanks, Jeff. And thank you, folks, for tuning into Trading Nation. Reminder, check out the live version in the 2 o'clock Eastern Time hour of CNBC. I'll see you there as well. Take care.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.